Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special podcast episode, I'm being joined by David Sands, PhD, healthcare investment banker, to discuss the state of the biotech industry. I will add that this past Monday, the Wall Street Journal published an encouraging article titled, "Why Biotech's Rally Can Last This Time." David, thank you for joining me today on the WTR Small Cap Spotlight podcast.
Thank you, Tim. It's great to see you today.
So, David, I always like to begin by asking guests to tell our audience about their professional backgrounds. So, would you please provide a 30,000-foot view of your impressive academic and career achievements?
Sure. Thank you, Tim, again for hosting me. So, Tim, as you know, I was born in Barcelona. I started my career with a background in chemical engineering. And I was very, very fortunate to have a scholarship from Novartis to move to Basel, Switzerland, where I did my PhD in oncology, in the research of compounds in what we call at that time chemometrics. We call it today artificial intelligence. So my PhD was basically in neural networks and trying to understand the mechanism of action of drugs with receptive of different molecules. Long story short, I was brought to the US as a scientist of national interest in 1998. And since then, I spent many years with Novartis, and then I was recruited to basically be part of the executive team at Imclone Systems, and that repositioned the company, sold it to Lilly for 6.5 billion in 2009, and from there I went into banking. I've been in banking for when we started the Great Recession. I wonder what I was doing in banking during the recession, but later I understood that my colleagues, former colleagues, CEOs of biotech companies were benefiting a lot from having a banker that understood the process of drug development, the need for to coordinate different efforts and to bring the financial service to the next level. Not only to do transactions, not only to raise money. It's not always all about money. It's about the organization, about the performance. And one thing that I learned is that this is not about the success of just one drug. It's about creating teams and investing in teams, and that the operations of an organization of a biotech is as important as the drug. We usually say we invest in the hockey, we invest in the CEO, we invest in the people. And many times when I sit at different organizations, for instance, I'm one of the advisors for the CPRIT organization in Texas. They very much focus on the science, and we should focus on the science. But then when they get in front of giving opinions about the performance and the execution of the team, they get lost. And I have to hold hands explaining this team, wait, we also have to invest in the hockey. The hockey is very important. The organization, the operations of these investments and these advising the teams is very, very important. So as of today, I feel I'm very honored to provide financial services to life sciences companies. And that's how basically I end up in finance.
Great. Thanks for that color, David. I have to say, as an aside, I particularly appreciate your background as a former Wall Street specialty chemicals stock analyst. So now let's dive into the all-important biotech space for a high-level review of key industry developments and subsectors within biotech generating the most excitement and interest right now from your perspective.
Yes, as you know, in the next 3 months, we all, and I hope I will see you in San Francisco, we're all going to meet at the JP Morgan 2026 conference. That's basically the annual place where everything gets reset. We shake hands, we talk to everybody, and it's a wonderful opportunity to basically evaluate where the biotech industry is now, where we're going, and basically the trends. So it's very clear that between now and JP Morgan, there are 3 events that to me are going to be transformative. And we are all waiting for the clinical results, because if these clinical results are positive and show a progress, then that will lead interest in that direction. So I want to point you to only 3, the easiest ones. I will talk about 3 companies that I don't cover, so I don't have any interest in these companies. I don't talk to the CEOs. I have no connection with these 3 assets. But to me, these are 3 assets that everybody's following, including myself, for obvious reasons. One is the Moderna and Merck clinical trial is an adjuvant therapy in melanoma. This is very important already because the adjuvant therapy, it is the next frontier for a lot of pharma companies for many reasons. But it is a space where there is still a gap on treatments. Clinicians, when we talk about adjuvant therapy, we're saying basically before we go into resection, before we go into surgery, what can we do? In other words, think about this. It is a treatment before we go into surgery, before we go to the operating room. This traditionally has not been the space for pharma, because remember, pharma, the best treatment for pharma is a chronic disease, okay? When you go in front of a surgery, that means by the time you schedule the surgery and you have the procedure, you have 30 days, very short time. However, if we show, this is the space where we can show really progress for one reason. We take this biopsy, we take this organ, we can take this melanoma out, and we can see what is the difference between when we took the biopsy that render the decision to have a surgery, and after we take it again. So we can see the progression of the treatment that we develop for that patient. So long story short, we are going to see the results of Moderna Merck combination of a cancer vaccine with Keytruda. Okay, so that also basically rejuvenates the story of immune oncology. As you know, in 2012, immune oncology was everywhere. Everyone wanted to do immune oncology. However, what happened? We had 200 anti-PD-1s developed. We had basically 70 in clinical development, 30 in late clinical trials, and today, 2025, we only have 3 drugs that basically made it, and made, obviously, Keytruda has been the most successful drug in cancer, but the next 2 are kind of, they do revenues, and I don't want to minimize the revenues because, but when you look at the third product, the revenues are really, really minimal. There has been exhaustion on immune oncology, and this concept of the cancer vaccine combined with an anti-PD-1 will rejuvenate the idea, will rejuvenate the interest in immune oncology, which has been basically dead for the last 5 years. The second, and we'll have these results, phase 2, phase 3 results will come late in 2025, right before JP Morgan. This is an anti-PD-1 cancer vaccine combination that we feel very, very excited, number one. Number two, in oncology, where I have most of my background is in oncology, we are moving away from this concept of organ treatment. We just explained the adjuvant melanoma treatment for one tumor to treat basically mutations of several tumors. I love this concept because we're moving away from one organ and we're basically going to the molecule, to the cellular treatment, okay? And in pathology, which is the space where I have spent most of the time, we don't see the disease of the organ. We see the disease of the cells. We see the disease of the cells that have a certain marker. And in this case, I think we're going to see a transformation with this company, Novalent, ticker symbol NUVL, that I believe they will, I mean, everything is up to grasp and we'll see the results. Is a pivotal phase 2 trial on the ROS1 positive non-small lung cell cancer type of patients. But again, we're targeting the ROS1 positive cells. And that, to me, is very exciting because we're moving away from organ designation, organ approval, to basically look for this type of cancers that express by the cell. I'm very interested in looking at the cell expression, not just the tumor, the cell, because this cell will appear in several tumors. So I will much rather see an approval based on a mechanism, based on a type of cells, than just narrow it down to one tumor. Because when you have that mechanism elucidated, that mechanism well understood, you can see from pathology, you can see this same cell in expressing other tumors. So I will say NUVL is another stock that I will follow before JP Morgan. And last but not least, I love these rare diseases, these genetic diseases that we are now treating with peptides. Let me stop here for a second. Let's look at this company, ticker symbol ASND. This Ascendis Pharma, I love what they do, okay? So they come up with a new treatment of genetic diseases using peptides, very profound, okay? I love the gene therapy, and as you can see from the Wall Street Journal article, there is a rejuvenation of gene therapies, but there is another class of treatments that is basically using peptides. What I like about this clinical trial from ASND in dwarfism, in basically children that have basically achondroplasia, they have seen 85% response. On children that are diagnosed with this genetic disease, they have had 85% growing normally. Okay, so yeah, they are children that are well diagnosed or well identified with this peptide, long release peptide. You can have response in 85% of the patients. So I think there is a rejuvenation again in the utilization of peptides. What I like about these TransCon CNP peptides is that with one single dose a week, you have extended release. Remember, peptides, and this is why the chemical engineering background that I have is so important, are molecules are very unstable. They will be eliminated very, very quickly. If we find a mechanism, okay, where we can have a controlled release of peptides, there is a whole host of companies, a whole host of peptides that are difficult to deliver, that now we have a better mechanism. So I will say we have 3 major events before JP Morgan, tremendous consequences on the positive results. If we have readouts, that will lead for a lot of thinking for the next milestones in 2026.
Those are wildly fascinating observations, David. I have to say, at a personal level, the peptide comment really resonates with me. I tore my rotator cuff 60 days ago, and interestingly, I found a conservative doctor who has me inject BPC 157 peptide twice a day in my shoulder, allowing me to avert the scalpel, which is a miracle. So, moving on, let's pivot to discussing biotech from an industry perspective. What is the current state of the biotech industry in terms of market dynamics? And why was the Wall Street Journal so bullish in their biotech article this past Monday?
Very good question. So I have met David, the Weiner, the author. He's a columnist at the Wall Street Journal. He is being referenced many, many times. His voice is spectacular, and we love the pieces that he's put together. Not only this one, but some of the pieces he put before. He was one of the first to talk about the Medicare bubble burst a couple of last year, and I think that he's being very he has a kind of expertise or cross pollination, if you wish, of Wall Street type of experience with healthcare, pharmaceuticals, food industry, but also this policy type of background. So I love what he's doing. The pieces that he's writing are very, very well received by the industry. A lot of leaders mention his comments, and the last comment he made this week is very relevant. If we look at the XBI index, this is the Spider S&P Biotech ETF, it's very clear that has been going up. Okay, and his observation has been look at XBI index. It went up 19% in the last quarter, when the S&P went up only 4%. Okay, so here you have already a metric. What I like about David Weiner is that he's a data-driven, he's fact-driven. He catches these numbers and he puts in a very compelling way. So it's very clear that his column is basically presenting the case of look now at XBI, because XBI has been in a nuclear winter for the last 3 years, okay, for many reasons. But what he's pointing is XBI now is at the same level as 2022. What that means is there has been a resurgent interest in biotech. We see basically a lot of data is coming out. JP Morgan is a great place to review all these data. But what we're saying is we're basically at more or less 40% below the pandemic levels. So we know that we tested the pandemic levels, okay? So think about this. We know that the XBI index can go to 120. Now we are basically around 100, 110. So we know that we can go to 120, 130, 160. So we have a big delta. And if we look at the financial sector now with lower interest rates, that will bring again what we call this wall of money. What happened pre-COVID, during COVID was zero interest rates. So there was a wall of money coming into biotech. We may see this wall of money again. And that is, I mean, I don't want to put my words in his comment, but I can see this concept of, is not the concept of David Weiner. He doesn't talk about the wall of money. But I think when you look at what happened in the past, when we look at what is coming, we are seeing another wave of interest in biotech. So that's one aspect. And basically, there is this positive momentum on life sciences. We pointed this, there are many catalysts. We pointed only three that I personally think are interesting. But one of the biggest catalysts that coincided with this week was basically the resurgence of this gene editing therapy. We saw a lot of risk, a lot of complications with gene editing. It is one of the most spectacular, one of the most amazing opportunities in healthcare. But we saw this company, again, I don't cover the company, Uniqure, QURE, it went up 350%. This is a very important event because when you look at this company, QURE, you realize that with a positive clinical data, you have the opportunity to generate $3 billion in value. Okay, so this is innovation. This is why we wake up every morning to work with CEOs. We work with life sciences companies that have this tremendous ability to create value based on innovation. Pushing for innovation, going through the limits of innovation is the most important reason why we wake up in the morning and we do transactions every day.
That's awesome. I will say anecdotally, I interview quite a few biotech CEOs on this podcast, and I'm picking up on the optimism kind of increasing by the month, which is exciting. So if I move on, David, given your detailed sector knowledge, what future technologies and investment themes are likely to prevail in the biotech sector?
So I don't think we can avoid talking about AI. AI is transforming everything. And I think everybody will agree that AI is a software, okay? AI alone is not enough. When I see a company coming to me and saying, hey, I have this platform is based on AI, I tell them, guys, this is not enough. This is the same as in 1985 when we started working and using Excel spreadsheets. Accountants didn't go away. Excel spreadsheet was a nice tool to use, but it's a software. So I always tell my CEOs, AI is just a software. Don't sell me a company just because they can use Excel spreadsheet or can use Word Microsoft. This is not enough, okay? It's a tool. AI is purely a tool. We cannot build a company around software. This is not going to happen, and everybody agrees, okay? So I think that what I like about the biotech sector today, and because of my background, is that we can accelerate, we can do more with less. We can do more, okay? Full stop. And obviously, this will need more people. I don't think that we're going to see less people. Again, we're coming from 3 years of nuclear winter. That means a lot of CEOs had to retire. A lot of people, a lot of companies had to reduce personnel. There has been a lot of people that have been pushed out of the biotech industry. Now that we have tools where we can do more, I think that we're going to need more people coming back to the workforce. getting into using AI more extensively. And to your questions, the areas that I like the most as of today are three. One is the space of autoimmune diseases, okay? 1 in every 8 women will suffer an autoimmune disease in the timeline, in the time span of their life. 1 in 8 is very, very prevalent, okay? And I don't want to get into the reasons of why it's happening. Whatever is the cause of these autoimmune diseases is very prevalent. We're moving from a space where we learn a lot in immuno-oncology. And a lot of companies that realize this, that we are exhausted. There is a fatigue, investment fatigue, immuno-oncology. They have moved into autoimmune diseases, and it's marvelous. Okay, I love this opportunity to look for more assets in autoimmune disease. This is an unmet medical need. It is a space where we see a lot of interest, and this is a space where we should pay more attention. Okay, number two, because of my background in pathology, I love regenerative medicine. I love to understand more about cells and how to get cells out of the body, train these cells, and put it back into the body. Everybody walked away from cell therapies, everybody, okay? And I think that now there is a lot of value. Remember, when we come from this nuclear winter, that means all these assets are basically undervalued. We had about 200 companies last year, 2 years ago, and that were trading below cash. 200 companies, 200 biotech companies trading below cash. Okay, so regenerative medicine has a long way to go because cells are the center of the disease. Remember, these are not organs. Okay, these are not patients. These are cells. Cells are the ones that basically have different mobility, different ways of reaching homeostasis. And the more we understand these cells, the better we'll come up with therapy. So to me, the whole concept of regenerative medicine as number two, I think will be a space that will provide a lot of interest. And to summarize, I think there are three areas that we should pay attention. One is AI. We need to follow this AI transformation. There are companies that will benefit tremendously. Second, autoimmune diseases, and it's an area that I really like. There is a lot of opportunities there. And last but not least, because of my background and understanding of cells, I truly believe there is a lot that we can do with regenerative medicine.
Great. Those comments were so thoughtful. I'm regretting that I'm not taking notes, but I'll listen later. So as I move on, the biotech sector has historically been quite capital intensive, in my opinion, even spooking away some institutional investors in recent years, prior to refound or renewed interest of late. Please discuss the current funding trends and comment, if you would, on recent IPO activity in the micro and small cap biotech sector, David.
I love this question. So as you know from my prior podcast, I have been a big proponent of these micro IPOs. When companies are private, and there is a room for companies to stay private, okay, there is a point of no return, and that is your valuation. Every round, you have to price it at a higher level. Then think about this. There is a point where the company becomes so expensive, the valuation becomes so expensive that no investors want to come in. So it's almost like you're hanging yourself. If you are a private company, every time you raise money, it gets more and more and more difficult because your valuation goes up, okay? So there is a moment where these companies, a lot of biotech companies that are in the business of long-term milestones, they need to go public. Because going public, it allows for resets. It allows for continuity. It allows for many mechanisms of these companies to be funded, not just by straight equity, not just by private placements. So going public and having access to the capital markets transactions is very important. One of the trends that I see of a lot of interest is assets acquisitions. In other words, if you're a publicly traded company, okay, and you have shares that have a lot of value, are traded every day, you can acquire assets and rejuvenate your company, go into a direction that may be complementary to the basket of products that you are developing, okay? This has a lot of interest from investors. Investors love to see companies being rejuvenated, companies acquiring new assets, and that allows for new funding offerings. So this mechanism of micro, small cap, biotech sector going public, I love it. I think it's a tremendous opportunity for the current investors to have shares that are publicly available, for CEOs and management teams to have access to public markets, and to have a wider audience, to have a bigger platform where you can tell many people in the entire world what you are working on and the opportunities that you can deliver.
Those nuanced answers are most interesting, particularly the front end of your answer, which I had never thought of before. So that's really eye-opening. Are there several biotech companies currently queued up to go public if the window remains open in 4Q25 and into the first half of 2026?
I think that the window for this type of transaction is wide open. The XBI index has shown tremendous performance, 90% performance. And I anticipate, I hate to be wrong, and I think that there will be, from what I see now and from the Wall Street Journal and many other sources, independent sources, there is a wide accepted opinion. There is a wide accepted anticipation that the biotech sector, the life sciences sector, in the next 3 to 6 months will be ready for more IPOs. And to answer your question, yes, if you look at the S1s, F1s, there is a resurgence of these filings, and we can say in confidence that there is a growth for these type of transactions.
Okay. And then just rounding out that question, if I drill down a little further, are there any biotech commercialization trends our audience should be aware of?
Yes, I think that remember, all these companies in the life sciences, they are in the business of progressing pipeline in the clinical development. We will not see a lot of assets with the commercializations. However, in the space of ALS, ALS is a huge unmet medical need, where if you have an asset that works, the FDA will grant you breakthrough designation, accelerated approval, and you can be commercial in 3 to 4 years. So there are specific areas of therapies where once there is a fast track designation, you can go commercial with a conditional approval. So we see that as an excitement opportunity for biotech companies, and the FDA is super supportive for these high unmet medical needs.
Great. And just wrapping up, this has been really insightful, David, and I appreciate you taking time out of what I know is a very hectic schedule for you to be with us. So in wrapping up, any final thoughts on where the biotech industry is headed to include innovative and impactful technologies?
Yes, I think that the markets are very interested in biotech right now. We're coming out of a 3-year, 4-year nuclear winter. There are many opportunities in life sciences, not only in biotech and therapies, but also in medical devices. And I like for investors to start looking at medical devices, diagnostics, and medical services. So let's keep the eyes wide open. Life sciences is broader, not just pharmaceuticals and biotech and therapies, but we also have tremendous opportunities in improvements in medical devices that are coming out, diagnostics that are coming out, molecular pathology. I think there is a huge revolution coming out from molecular pathology. But last but not least, everything that we're doing with AI in workflow of patients, booking your medical appointments, getting your prescriptions online, all these things are going to improve life sciences altogether.
Great. Well, thank you so much for joining us today, David Sands, PhD, healthcare investment banker, to discuss the state of the biotech industry. Also, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick. Thank you for listening, and don't forget to subscribe, as well as visiting, www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.